Hi students, welcome to second year commerce class. In this class we are going to discuss about listing of securities. Already we have done with stock exchange, its functions, significance of stock exchange, then SEBI, features of BSE, NSE, then we have learnt about various types of speculators, bull, bear, stag, lame duck, etc. Then we have learnt about jobbers and brokers. So in this class, we are going to learn a very important topic, listing of securities. Listing of securities means, in simple, taking permission from the stock exchange to trade our securities on the official floor of stock exchange. Okay, as you know that whenever there is a platform for some market, each and every trader is not allowed to trade his goods from that platform. To occupy some space on that platform, he has to complete certain formalities. He has to obtain some license, fulfill some formalities like payment of fees, etc. Then he is allocated some space on that platform, so he can go and do trade of his goods. Okay, like you see, maybe a vegetable market is there. So randomly every farmer, every vegetable vendor cannot go and sit over there. So to have some space in the market, initially you need to complete some formalities where you have to submit your documents as proof of farmer, then Aadhaar card, then pay the required fees to the market committee, then become the market committee member, then you are allowed to sit over there and do your trading activities. Okay. Similarly, anywhere, for example, in Twin Cities there are thousands of students. For every student we are not providing education from the platform of Sri Medhavi Junior College. To whom we are providing this education? Those who have completed the formalities of admission of this Sri Medhavi Junior College, for them we are providing education. So to get education from this college, what the student has done is paid some fees, submitted certain documents, then is been included into the list of students of Sri Medhavi Junior College, then only he or she is entitled to get the education from this college. Similarly, not all companies of the world, not all companies of our country are not allowed to sell, to trade their securities from the official floor of stock exchange. In order to trade, that means in order to sell your shares, sell or buy, buying and selling of your shares from the official floor of stock market through the official brokers of stock exchange, you have to take prior permission from the stock market, that is stock exchange. That is what called as listing of securities. Okay, a company may be selling different kinds of securities. So whatever the securities you want to trade through stock market, those securities you have to include in the list of Stock Exchange of India. So then only you are allowed to do trading of those securities from the official floor of stock market. That is called listing of securities. That's what I have written the definition over here. Listing of securities means the inclusion of securities in the official list of stock exchange for the purpose of trading. What do you mean by trading? Buying and selling. Who will help you to buy and sell the securities? The stock brokers, so-called bulls, bears. Okay, brokers are there. They will help you to buy and sell the securities. So in order to trade your securities from the stock exchange, you have to include your shares in the official list of stock exchange. That is called as listing of securities. Okay. Now what is to be done? How you can include your shares into the list of stock exchange? How can you go for listing of securities? What are the formalities are to be completed? What is the procedure that we are going to discuss now? The first one, procedure for listing of securities. First, what you have to do? What are the various documents you have to submit with the stock exchange in order to list your securities? Is first thing you have to submit is copies of MOA. What is MOA? Memorandum of Association. Okay, you have to submit copies of MOA, that is Memorandum of Association, AOA, Articles of Association, then you know prospectus. I hope all of you know the contents of MOA and AOA. We have learnt in our first year. Memorandum of Association includes 6 clauses: name clause, situation clause, objectives clause, capital clause, liability clause, and then last one, association and subscription clause. As you all know that MOA is the charter, the constitution of the company, the foundation of the company in which the company structure is built. So MOA is the official book, say the procedure and entire information of the company is written over there. Articles of Association consists of various rules and regulations for the internal management of the organization, joint stock company. Then we have got prospectus. I hope you all know this. Prospectus is the invitation for the subscription of securities of a joint stock company, where you invite the people through prospectus that you come and buy our shares, debentures or any other bonds in order to provide capital to the joint stock company. So prospectus is the official circular or notice or invitation given by the joint stock company for the subscription of its shares and debentures. So these 3 documents. Then we have to submit directors' reports. As you all know that joint stock companies are managed by the board of directors, then managers. You all learnt how the joint stock company is managed. In first year you have learnt the company is managed by a team of directors, then the executives or say the managers appointed by the directors. So these directors will give reports on the activities of the company. Then balance sheets. As you all know that balance sheet is the statement of liabilities and assets. So we have to submit the balance sheet of joint stock company. Then agreements with underwriters. I hope at least some of you remember the word underwriter. Who is the underwriter? He is a person or say a broker who gives assurance for the issue of shares by a joint stock company. As you all know that sometimes it may become difficult for a joint stock company, public company, to secure minimum subscription from the general public. So in such a case, we have got a threat of losing our public company recognition. So in order to ensure that our shares are sold in the market, we enter into agreement with some underwriters like brokers, who in turn, by taking some commission, they will give you some assurance that in case if general public are not interested to buy your shares, they will buy. So ultimately we have to understand that underwriters are the people who help to get minimum subscription for your company. Then brokers. Normally, you know, we will have various agreements with various stock brokers in order to trade our securities. So what are the agreements we have got? What type of, what is the amount of commission we are going to pay to those brokers and underwriters? Those details we have to submit to the stock exchange. Then specimen copies of shares and debentures. I hope you understand the specimen copy means a duplicate copy. Similar copy is called a specimen, a model copy. Okay. Like many a times you might have seen specimen signature. That means similar signature, some duplicate or say the model you will provide. So similarly here, generally we will have a official share certificate, a document on which the company's seal is there, details of the company are there. So the face value is written. So that model, how our share looks like, how our debenture looks like, those specimen documents we have to submit to the stock exchange so that they identify that yes, this share and debenture belong to so and so company. So we have to give the model copies of shares and debentures, then letters of allotment. As you all know, many times I told you, we give time to investors, the shareholders to pay the money. First we receive the application, then we allot the shares. So once we receive the application, after thorough verification, according to our requirement and convenience, we allot the shares. So whenever the shares are allotted, we write the letter to the concerned person, concerned shareholder that, yes, Mr. So and so, as per your application number, you are being allotted with certain number of shares, so please pay the allotment money. Like that, we write the letters of allotment to the shareholders who have applied for the shares of our public company. So those letters of allotment also we have to submit to the stock exchange. Then acceptance renunciation means whether the people or say the company have accepted to allot the shares, those letters also we have to submit. Then the third one is particulars regarding capital structure. What do you mean by capital structure? Every joint stock company will have various sources of business finance, as already I have learnt in first year. We will have share capital, we will have debenture capital, we will have long-term borrowings, we will have retained earnings. So like this we have to mention. Means how we are going to get, how we have accumulated the capital on which the company structure is built, how we got that money, how many number of shareholders are there, how many number of debenture holders are there, how much money we have borrowed through banks and various financial institutions, how much of reserves we have got, which is also called as retained earnings. Like that we need to mention the capital structure to the stock exchange. Then a statement showing the distribution of shares. So whenever you are allotting the shares to different people, as allotment is done, you have to prepare a statement to how many people you have given the shares in what numbers. Okay, so the number of shares held by each and every person, you will be preparing a statement. So the other people will come to know that who is the major holder of the shares, how many number of people have invested, what is their interest in the company. The common people will come to know when you give the statement of distribution of shares. Then particulars of dividends. I hope you all remember what is dividend. Dividend is share of profit given by the public company to its shareholders. So normally when shareholders invest their money into the shares of a joint stock company, at the end of 1 year, when the company earns profit, out of that profits, the board of directors will declare dividend to the shareholders. That may be as percentage on the face value of the shares held by the shareholders. Sometimes when the company earns more profits, okay, high profits are earned, we give bonus to shareholders. So sometimes we already have paid, sometimes we announce, so that we have to mention. For the past 10 years, for the last 10 years, how much dividend you have been giving to the shareholders, how many times you have issued bonus, whether declared or paid, that you have to mention. That means by this, the shareholders and the common people will understand how better you are performing. Like a junior college gives publicity about its results, they display their ranks, they display their marks. That means by seeing that, the parents will understand how better we are teaching. Similarly, for the past 10 years, how many dividends we have declared, how much amount we have given as bonus. Okay, for the current year, how much bonus we have declared, for that will be mentioning in the document submitted to the stock exchange. Then particulars of shares and debentures for which permission to deal is applied for. Now, at present, when you are applying for listing of securities, which shares you are going to include, which debentures you are going to include in the stock exchange list. As in the beginning of the class, I told you that not all shares, not all debentures may be listed in the stock exchange. Only particular type of shares you would like to include into the list of stock exchange. So, which type of shares you want to include, which type of debentures you want to include, you have to mention their type in the stock exchange list. Then brief report on company's activities since its incorporation. Incorporation means beginning. So from the beginning, what you have been doing, how many number of goods you are manufacturing, okay, what was your volume of trade, turnover, what was the turnover, number of units manufactured, all the reports of your performance are to be submitted to the stock exchange. Next, listing agreement with required initial and annual listing fees. So what, when you want to list your securities with the stock exchange, you have to enter into an agreement that you will follow the rules and regulations of stock exchange and you abide by the rules framed by the stock exchange and you follow the conditions laid down by the stock exchange. Unless until the company enters into the agreement with the stock exchange that you will be going through the rules and regulations, you will be following through the regulations and guidelines given by the stock exchange may not permit you. So that is the reason the public company has to enter into an agreement with the stock exchange that they will follow the rules and guidelines given by the stock exchange. So that you have to mention. Then you have to pay the fees also. There may be some prescribed fee in order to list your securities with the stock exchange, that is called annual listing fees, that you have to pay. So if these formalities are completed, your name will be included in the list of shares to be traded in the official floor of stock exchange. So then your company will have lot of reputation. Once your shares are listed, your name starts displayed on various screens and newspapers. Now, why should we list our securities? The aims of listing. What are the various aims of listing? Why without listing also we can trade our securities. Listing is not compulsory. When individually your company has got reputation and you know that without the help of stock exchange also you can get capital from the common people, then there is no need for listing of securities. But when you require the support of stock exchange, you should go for listing of securities with the stock exchange. So why a public company goes for listing of securities? What are the various aims? First one is to have control over the dealings of securities and to have proper supervision. See, if listing of securities is not there, then companies will behave in their own manner. Stock exchange will not have control over the trading of securities. So companies may be following their own rules and regulations. They may be cheating the people. They don't know who are purchasing the shares. Okay, they don't know how much commission is being paid to the underwriters or other brokers. So stock exchange simply becomes an idle association without having any proper powers. That is the reason a listing of securities has been included, so that the activities of the public companies with respect to issue of shares and debentures will be under the monitorship of stock exchange. So if listing of securities is there, when the trading of securities will go through the stock exchange, then stock exchange will have a control over those activities. Then to decentralize the economic power, many times in first year I told you, if economic power is concentrated only in the hands of few people, only in few corporate bodies, it is very dangerous to the Indian economy, to the society. Okay, so that is the reason the economic power is to be decentralized, means it must be distributed in the hands of various people. It is not advisable to have crores of rupees in the hands of only one or two families. Like in India right now, as what is happening, only Reliance company, Tata company, some other few families are having thousands of crores wealth, whereas people are struggling with poverty. So we need to give contribution, we need to give participation to various people by allowing them to invest into shares. We should make various people as shareholders of joint stock companies, public companies. We have to make them directors. So wealth must be distributed uniformly among the society. So for that purpose, if listing of securities is there, we can control the concentration of economic power. Then to safeguard the interest of promoters, many times we have discussed about types of promoters also. The people who take initiative to start a joint stock company are called as promoters. If listing of securities is not there, promoters may lose grip on their company. So they don't know who are going to purchase the shares and debentures, who are having the stake in the management of the company. So for that purpose, we have got listing of securities so that promoters clearly knows, okay, who are being the shareholders, to whom the shares are being issued, etc. Then to protect the interest of investors and shareholders, as you all know that if stock exchange does not have vigilance over the trading activities of shares and debentures, that may give scope for manipulations of prices. Many times we have discussed it. Brokers may cheat the innocent investors. Ultimately, these people, common people, may lose their hard-earned money. To avoid that, we should have proper vigilance over the trading activities. So in that case, listing of securities will help the investors to get proper dividend and their interest of increment of their investment value, okay, all that are protected. So these are the aims of listing.